Picture this: a government generates money with a built-in expiration date, and if left unused, it vanishes. What would have happened to the world economy? This is what concerns most Americans because no one wants their money to disappear when they only intend to store it and save up for the future. Welcome to Nova Society, the hotspot for all things personal finance. Don't wait any longer. Be part of our community today.
Working on a digital dollar? We are actually evaluating that. Most major countries are now looking at the possibility of having a digital currency.
In July of this year, was set to introduce its new digital payment system, causing substantial repercussions across the internet. This is happening as the US dollar is gradually being substituted by a central bank digital currency CBDC, and numerous countries globally are actively developing their CBDCs. Is there even anything for the people to worry about? Here's what the government has to say about its launching.
To these organizations such as the Federal Reserve. And so last year, President Biden issued an executive order to explore the creation of a U.S. central bank digital currency, effectively converting the dollar into a centralized digital currency.
According to a Citi report, it's projected that by 2030, around $5 trillion digital dollars will be in circulation throughout the global economy. However, there's a significant challenge, as a large portion of the American population lacks confidence in the government's ability to oversee this transition. To provide some historical context, during the 1950s, often referred to as the golden age of capitalism due to remarkable economic growth and increased wages, a Pew Research survey conducted in 1958 asked the American people whether they trusted the U.S. government to act in their best interests. During that period, trust reached its zenith at 77% by 1964. Nevertheless, over the years, this trust has been gradually decreasing, and today it stands as low as 20%, with only 1 out of every 5 Americans trusting the government to handle this transition. This diminishing trust is one of the reasons why many individuals prefer to use alternative forms of currency, such as cash and even cryptocurrencies. Currently, the government is working on developing its concept of a central bank digital currency CBDC, which will have far-reaching implications, impacting not just concepts like privacy and freedom but also cryptocurrencies like Bitcoin. It's important to note that the new Fed payment system and CBDCs are related but distinct concepts, although many people tend to conflate them. While many people think that it's a system that may cause delay, a hassle, or even a ridiculous idea, that's not the case at all. To give you a picture of what's truly happening, here's how it operates. This new payment system will enable businesses and individuals to send and receive instant payments 24/7. This is possible because funds will settle between banks in real time, taking only seconds. Let me provide a couple of practical examples of how this system will be used. Imagine you're a coffee shop owner in need of a quick delivery of coffee beans. When you receive a payment request from your supplier, you'll pay via a participating bank, such as your credit union. The coffee bean supplier will instantly receive your payment. On the back end, your credit union will send a digital form called ISO 20022 to the FedNow service, which will validate it and send a message to the coffee bean supplier's bank. The receiving bank will confirm in real time that it can accept the payment, and the FedNow service will then debit and credit the money, sending a message to both banks that the settlement is complete. This entire process, although it may sound complex, happens almost instantaneously. In contrast, our current system takes more time and incurs higher costs. This service will eventually extend to areas such as bill payments and transfers between different accounts. It will be especially useful for situations like paying a utility bill due on the same day without incurring late fees. While the Fed plans to introduce this service for peer-to-peer transactions, enabling people to send money to each other like using Venmo or Apple Pay, it will initially only be available within the United States. Sending money instantly overseas won't be an option. In the first week of April, they began providing formal certifications to their participants. So, that's the FedNow payment system, closely associated with the central bank digital currency CBDC. Inflation and the declining economy in 2021 have been a major source of stress, especially for families. In cases of investment fraud, the average amount lost was around $70,811. This underscores the importance of online protection. This has also led to the emergence of central bank digital currencies (CBDCs) worldwide. As of now, 11 countries, including the Bahamas with the Sand Dollar, Jamaica, and Nigeria, have already launched their digital currencies. Additionally, 18 countries are in the testing phase, 32 are developing their digital currencies, and 39 are researching this area. Only 15 countries are inactive, and 2 have canceled their efforts. In total, 114 countries, accounting for 95% of the world's GDP, are in some way involved in this process, including the United States. So, why is the Federal Reserve so focused on digitizing the dollar when it's already digital? The key distinction lies in the fact that our current monetary system relies on digital claims of currency. When we transfer money from one account to another or use apps like Zelle, Venmo, and Apple Pay, we're essentially sending digital IOUs and claims to money but not the actual money itself. Banks often require third-party verification to confirm the existence of the money. True digital currency, in contrast, allows for the direct transfer of real value from one entity to another without the need for multiple third-party banks. This may seem next to what cryptocurrencies are trying to achieve. However, there's a significant difference. CBDCs are controlled through a private network by the government, making them centralized, which grants the government full control over their supply and flow from one point to another. The introduction of a central bank digital currency offers various advantages and disadvantages. It would provide the Federal Reserve with direct control over the money supply, allowing for more flexibility, as already demonstrated during the pandemic through quantitative easing. This new system would offer enhanced speed and stability, modernize banking, and potentially lower the cost of banking services. Additionally, it could streamline the tax process, as the government would have direct insights into citizens' incomes, simplifying the tax filing process. However, there are substantial risks and downsides associated with CBDCs, considering their centralized nature and the potential loss of privacy and freedom.
They will do it. So what the central bank digital currency is all about is surveilling Americans and controlling behavior of Americans. And how do we know? Because we've seen this happen in other parts of the world.
The concept of CBDC is being referred to as the digital dollar of Big Brother, and this skepticism is well-founded. CBDCs will be linked to your distinct digital ID, which will be employed to compile your social and financial profile. This scenario closely resembles a storyline from a Black Mirror episode. If the government wished, they could potentially freeze your assets, and with a simple action, your bank account could suddenly display a balance of zero if they disapproved of your spending choices. The establishment of a CBDC would grant the government the technological capability to perform such actions. If the government aimed to stimulate spending, they could rapidly deposit funds into our bank accounts, which may sound appealing. However, if their goal was to discourage saving, they could introduce an expiration date for the money, much like what China implemented to boost spending. Now, if all of this seems like a conspiracy theory, governments, including the US, can potentially misuse their authority. An example from history is the decree issued by Franklin Roosevelt on April 5, 1933, which required US citizens to surrender their gold claims, including coins, bullion, and certificates, within a month. Non-compliance resulted in severe penalties, including imprisonment for up to 10 years and fines of up to $10,000 per year. In 1933, this fine amount represented over 3 times the average annual income. Drawing from more recent history, the IRS faced criticism for unfairly targeting conservatives for tax evasion between 2010 and 2012. Given these considerations, the central question is whether the potential benefits outweigh the risks. The situation should not be seen as a battle against cryptocurrencies or Bitcoin, as the government's primary concern is global commerce. By combining the government's trust in its currency system with private sector innovation, a CBDC aims to create an innovative financial product that keeps the US competitive on the world stage, with the byproduct being increased control. However, CBDCs are inevitable as countries worldwide launch their digital currencies, and the US will likely not want to be left behind. So, it may not be advisable to sell dollars and invest in Bitcoin solely based on these developments. Transitioning to digital methods has undoubtedly offered convenience, but when it comes to financial matters, our perspective shifts. You might find yourself in a situation where you aim to accumulate savings for a specific goal, and the process toward that target might be lengthy. Imagine waking up one day and your account balance is zero. You'd be doomed. If you want to learn more about personal finance and generational wealth building strategies, visit our channel and subscribe for more enlightening videos to increase your wealth.